Next question. A company is to invest euro 1 million, that is 10 lakhs, for a period of 3 months after 24 months today. Means after 2 years for 3 months. It enters into 24 into 27 forward rate agreement. 24 into 27 means after 24 months for 3 months. How this 3 is calculated? 27 minus 24. With agreed rate of interest of 5%. After 2 years, the 3 months interest is 5.5%, of course per annum. Explain the cash flow on account of forward rate agreement. You are required to answer what amount will be invested by the company for a period of 3 months after 24 months from today. What amount will be received by the company after 27 months from today? That is the question. Try to calculate answer of both the questions on your own. So friends, over here first of all we understand a new technical term, 24 into 27. So be careful for understanding this. As usual, we will go with the simple steps. Step number 1, calculation of interest income at the rate forward rate agreement. Means the opposite party with which, that is say with whom we enter into the contract, based on that say we should get interest at the rate of 5%. So it is PRN upon 100. The amount is 10 lakhs. Rate of interest is 5%. And the time period is 3 months. So 10 lakhs into 5% into 0.25, that comes to 12,500. Okay. Now step number 2. Actual interest income. Now friends, over here we can observe that so the actual interest rate is 5.5%. So over there, again I is equal to PRN upon 100. So we understand that say the amount is 10 lakhs into rate of interest is, I think 5.5%, yes, into 3 divided by 12. So 10 lakhs into 5.5% into 3 divided by 12, 13750. So last, step number 3, difference in present value term. Difference in present value term to be paid by the company in forward rate agreement. So the company which has entered into the forward rate agreement is required to pay. Why? Because it is going to receive more interest. So we understand that so the actual interest income minus interest income under FRA whole divided by 1 plus K. So we understand that so the actual interest income is 13750. It is more by rupees, that is minus 12,500. So the difference of that is the amount by which it is more. And it will be discounted in present value term using the actual rate of interest, that is 5.5%. That comes to 1.375%. 1.01375. So over here 0.055 into 3 divided by 12. This is what we understand. So 13750 minus 12,500 upon 1.01375. So 1233.05. So this is the amount that say you are required to pay. Now specifically the question number 1 is that what amount will be invested by the company for a period of 3 months. So amount of investment will be 10 lakhs minus 1233.05. It is 9,98,766.95 at the rate of 5.5 percentage for 3 months. This is the amount which will be invested. Answer for the second question. What amount will be received? We understand it's the maturity amount is equal to principal plus interest. So it is 9,98,766.95 into 0.055 into 3 divided by 12. 1.01375. Okay, 5.5% is for per annum. So for 3 months it would be how much? That is the way we will compute it. So over here it is 0.055 into 3 divided by 12. 998,766.95. That comes to 10,12,500. So basically you are getting the interest income of 12,500, and that is what's the amount of the interest that say you should have received. So this is the way, so there is an execution of the forward rate agreement. So please take down answer. The first of all, execution of FRA. In that step number 1, interest income at the rate FRA. Step number 2 is actual interest income. Step number 3 is the in present value term, it is settled. And these are the two specific answers.